MCQ Quickie. Come, let's go ahead and read out the question. State which of the following statements is true. And the options are: a joint venture has a definite life, financial statements are not comparable, sales book is a part of ledger, and owner's equity equal to assets plus liabilities. Come, let's go ahead and analyze the option one by one. The first option is a joint venture has a definite life. See, the joint venture, first you have to understand what exactly the joint venture is. Let me tell you an example. You would have seen many signboards in front of the vacant site stating that joint ventures are invited. The owners would state that the joint ventures are invited. The builders are invited for joint venture. What does it mean? The owners may be having a land and they may be getting into joint venture with the builders. They enter into a kind of partnership. The builders will build the home. Owners will offer the land. They enter into a collaboration. The building is built. Then it is sold and the profits are shared, or maybe the consideration could be paid to the landlords and the builder vacates the place. This is the structure of the joint venture. Now, can you say that this joint venture has a definite life? Yes, of course, because the moment the construction is done, the builder leaves the place. So the joint venture has a limited validity. So yes, the joint venture has a definite life. What are the statements that are true? That is what asked. So the joint venture has a definite life. This could be true. This could be our preliminary selection, but let's not jump into the conclusion. We'll have to analyze the other options also before finalizing the conclusion, before finalizing the answer. So let's go ahead and analyze the other options also. Financial statements are not comparable. No, this is false, because your question paper itself will contain a lot of financial statements and you may be asked to compare the financial statements. So this cannot be true. Sales book is a part of ledger. No, this cannot be true, because sales book can never be part of ledger. Sales book, I tell you, that is forming part of subsidiary books. Invoice, from invoice, sales book is done, and from the sales book, the sales ledger is prepared. So the sales book is separate and the sales ledger is separate. So sales book cannot form part of sales ledger. So this is also not true. And the final one, owner's equity equal to assets plus liabilities. You know very well, you have been doing the balance sheet right from your higher secondary. Owner's equity is nothing but assets less outside liabilities. It cannot be assets plus liabilities. So this is also not true. So the first one, our preliminary selection, joint venture has a definite life. This is the answer for this problem. Hope you guys are pretty clear.